Hello, everyone. Once again, this is Black Forex coming to you with another market analysis video. Today, we're going to be looking at the gold. We're going to be looking at and discussing gold and see how it's going to be behaving for this upcoming trading week and look at the long-term outcome of how gold may be presented over the next several trading weeks to see how it's going to be behaved with all the different economic factors going on in the world that can affect the price of gold. Okay. With that being said, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here because you want to be able to find good, credible Forex content that can help improve your ability as a trader and that can help put a little bit of extra money in your pocket during these inflationary times, okay? Now, with that being said, let's go ahead and discuss what's going on with gold. Now, you guys have been watching our videos for some time. Before we get to talking about what's happening physically on the chart, which is technical analysis, we like to talk about the fundamentals, okay? So we're going to be first discussing the fundamentals of what's happening with gold and what could be possibly affecting gold price before we get to diving in on the chart. Okay, so let's go ahead and get started. So to understand gold, you have to understand this one simple rule. Gold and the US dollar have an inverse relationship, okay? In which when the gold is strong, the US dollar is weak. And when gold is weak, no, excuse me, let me say that again. I'm sorry. When gold is strong, the US dollar is weak. And when gold is weak, the US dollar is strong. And then when you switch that around, when the US dollar is strong, gold is weak. And when the US dollar is weak, gold is strong. Okay. So it has an inverse relationship. Okay. So being that the price of gold is heavily contingent on what is going on with the US dollar, we're going to have to understand what is happening with the US dollar, okay? And we have several different things going on that's happening with this US dollar. Some of it's traditional and some of it's non-traditional. So first we're going to talk about the non-traditional thing, okay? Now, what we have going on that's non-traditionally affecting the price of the US dollar is the price of oil and the price of gas. Okay, because typically the price of gas really dictates the Canadian dollar and not the US dollar. But being that we're living in a time of heavy inflation and ever rising gas prices, as the gas continues to go up, that means there's less spending happening in the economy, which is causing the dollar to start to devalue. So as long as gas continues to go up, we will start to see a continued devaluation of the US dollar, which in turn will cause gold to gain strength. Okay. But on the other side of that, if we start to see that gas prices are being controlled and we also start to see that inflation is being controlled, then we will see gold starts to become price in gold starts to drop as the US dollar starts to gain strength, as gas prices are controlled and inflation is controlled. But if gas prices continue to go up with no end in sight and inflation and economic measures and policies in place that are designed to combat inflation is not combating it effectively or expeditiously, then we will start to see also a devaluation of the US dollar and we will start to see an increased prices in gold. Okay. Now, another factor that can also cause prices of gold to rise is if the war between Russia and Ukraine starts to intensify a whole lot more. Okay. Because gold is also considered a safe haven commodity. So anytime there's panic in the world, there's panic in the world markets, in which is being fueled by like a global pandemic, like we had just with COVID or war, right? Then we could see an ever rising price in gold. Okay. So the factors that we have to look into to pay attention to what's happening with gold is we have to be paying attention to what's happening with the US dollar. Okay. Then also we have to be paying attention to between the global conflict between Russia and Ukraine. Because if that the European conflict between Russia and Ukraine. Because if the European conflict starts to spill over until Russia versus NATO or Russia versus the world, then we're going to have world panic, due to nobody's not gonna know the outcome of this uncertainty of the situation that we're going to be in. So then we'll start to see gold prices rise very fast. Okay. And then, like I said, also, we're going to have to also pay attention to the US dollar as well, because because of the relationship between gold and the US dollar. Okay. Now we're going to be making videos that's going to be, we're going to directly deal with the US dollar, explaining everything going on with that. And we're also going to be making videos talking about gold as well, talking about oil as well. So make sure you check those out. Okay. But now that we got all the fundamentals out the way, let's discuss what's been happening on the chart from a technical analysis standpoint and use the fundamentals we just discussed to give it context. Okay. Now, as we can see that we were going up and going up and going up and going up and going up in price, right? And this was always so this large increase in price was just all due to the uncertainty that was surrounding the entire European war between Russia and Ukraine. Nobody knew if this was going to spill over into a global conflict or spill over into an entire European war in which all of NATO plus America is fighting Russia, which would in turn be actually World War III. But nobody knew about the uncertainties of what was going on, which was causing gold prices to rise. But as we started to see that the war, which is staying between Russia and Ukraine, and no other countries were participating into it, so it's mostly like a European conflict and a European war between two countries. Okay. And as we could see, as that started to happen and get stabilized, we did have a rise in price. When price started going down and going down and going down, we got shaky right here. And then we had price drop even more because it was around March 11th and March 12th that the Fed started talking about actually increasing the interest rate. And one thing you have to know if you trade Forex markets or whatever type of commodity markets that you trade, whether it be stock or other markets, you have to understand that human psychology plays a big role in it. And if something's being discussed, even though the policies or procedures are not physically in place to actually make what is being discussed happens, that discussion alone can cause the markets to be affected. So right around here is when they was discussing increasing the interest rate to combat inflation. And like we said before, that there's an inverse relationship between gold and the US dollar that caused prices to drop. Okay, and then we had a steady price drop. Okay, and we did started to pick up some price. We started to pick up some price here. Then we started to go down here, and then we started to go down. And then we started to pick up price. Okay, so what basically happened around this area here was that there was a terrorist attack on the state Saudi owned oil reserves, right? On the state Saudi oil company in Saudi Arabia, which in turn uh, which in turn affected the supply of available oil that was in circulation around the world, which made the oil prices increase, which brought which brought the value of the US dollar down, which caused the gold to go up. Okay. Now you have to understand that we're living in a very unique situation with our global economics, and typically oil prices on a normal basis do not affect the US dollar. The currency that it does affect is the Canadian dollar. But being that we're in a situation where gas prices is very high, and the high gas prices is causing everyday tax-paying Americans to not buy other consumer goods because they need to save money for gold. Anything that happens with oil is going to be affecting the US dollar, which in turn is going to be affecting gold. So once we had this attack in the Saudi Arabia on its state oil ran facility, which also reduced the circulation of oil around the world, we did have a devaluation of the US dollar, which did cause which did cause gold to pick up. Okay, but we're in a very unique situation from a technical analysis standpoint. Okay, because we're in a situation where we can be possibly right. making a low low, and this can be the low high, right? Or we could be in a situation where this can be our high high, and this can be our high low. Okay. So what's solely going to dictate the direction of oil moving forward is going to be strictly on what is happening with the fundamentals between between gold, the US dollar, and oil. Okay. So if the US dollar starts to gain strength over the economic policies and procedures in place, is combating the inflation effectively and expeditiously, and oil prices are being controlled, we will start to see, continue to see a drop down in price. Okay, we can drop as far as we can drop as far as here, or even here before we start to see a pick up in price again. Okay, or we're also, or the on the other side of that coin, right? We can continue for the long position if oil prices start to continue to rise, inflation also continues to rise, which means that the US dollar is going to keep getting devalued and become much weaker, which means gold is going to be stronger, and we will continue to go towards the long position side of this, probably possibly going as high as 1985 to 1912, eventually going to 1940, I mean, to me, 2000 and 2040 before we start to see price come down some. Okay, so we may get to this area here before we see price comes down some. Okay, so you're going to have to pay attention to what is exactly happening with the global economics concerning oil and the US dollar. If anything causes an oil shortage, whether it be natural or artificial, we're going to see a drop in the US dollar and an increase in the value of gold. If we start to see more circulation and oils becoming a lot more available, due to they start tapering back on the oil sanctions on Russia, just so to give other countries and American citizens a break on the oil prices. Or if we start to see the government, because one thing I did read over this weekend was that the U.S. government is considering giving stimulus checks to help give people more money available at the pumps. So if we start to see things like that, the uh, also coupled with the combat of inflation, with increasing interest rate, economic policy going in that direction of a positive direction, then we will see a drop down in gold. But really, what's going to be happening with gold is going to be solely dictated on what is going on with the global economics concerning the U.S. dollar and oil. Okay. And that's kind of non-traditional because, like I've stated before previously in this video, the only currency that's truly affected by oil prices is the Canadian dollar, because one of its major exports in Canada is oil. Okay. But since we're living in a situation where a lot of commodities are now starting to tie in together just because of how global economics work today, we're in a situation where now that the oil is affecting the US dollar, which is now also affecting gold prices as well. Okay. So I hope that information was helpful for you guys. Happy trading.